doesn't seem to matter to us, so most people don't know about it or haven't given it much thought. Now that things are really getting bad, we need a moment of calm, and I think it's begun. I like how this moment makes me feel better. This is a painful and short-term fix, because there is a lot of misunderstanding. There are a lot of people who thought the world would work one way and now it changes. There are many signs that fear is making its way into the markets. First, let's look at the numbers. In 2020, M2 growth reached its highest point of 27%. Since then it has been slowing down. We think it's getting close to or might be below 3% year-over-year, which doesn't leave much room for growth or inflation unless velocity, the rate at which money changes hands, really picks up. We don't think velocity is picking up right now. Instead, I believe that people and businesses are becoming more worried and are spending less easily. The world is starting to run out of cash, especially in the trading markets. This is a very important point in the bull run. If you look closely at what companies are doing, you'll see that most of them are cutting back on staff and have no plans to hire more. That's usually a very good sign of where the economy is going, and how confident some business owners are that it will stay safe in the future. In general, they do this when they know for sure that things are going to slow down and there isn't a lot of information about when more money will be printed and more cash will be available for the business cycle. We won't know for sure what that will look like until the Federal Reserve says exactly what they plan to do with quantitative easing, or until other countries start selling their bonds and exchanging the US dollar for their own currency. This would give the rest of the world more access to the US dollar. Having said that, we did get some great news about Japan and China. An increasing number of them are selling a lot of US bonds right now. This is making the US markets more liquid, which is exactly what US buyers need. China, Japan and Russia are all doing pretty much the same thing at the moment. People in Europe are also doing this a little because they want to make their own currencies stronger because the US dollar has been so strong, especially lately with all the trade wars that have been going on because of Trump's policies. Because of this, I'd like to add a bit more to what Cathie Wood is saying about the economy, since this is going to become more important in the world of cryptocurrency, and I find a lot of it very exciting. Now pay attention, let's go back to Cathie Wood. It makes me think a lot of the early 1980s and things that happened back then. The world's treasury ministers decided to sell dollars in two agreements, the Louvre Accord and the Plaza Accord. This was done so the rest of the world would not experience too much deflation, and when I say deflationary impact, I mean that some countries' currencies are really falling apart, making their inflation rates look like they're in hyperinflation or going that way. But they can't pay their dollar-denominated debts, and are being choked by them. Long term, this turns out to be a pretty deflationary position. We want to know what the weak link is in the US. Are our benefits it? We don't know. But we do know that the US has LDI plans. They're not as tied down as we think, but you never know. If not that, what are some of the weak links we can see? As if that wasn't enough to worry about, we now have even more reason to be so. The Mannheim Used Car Index came to us yesterday. It's a value measure that prices things well, and it dropped another 3% or so. Last month it went down by more than 4%. In other words, the increase from one year to the next has gone from 54% to. This is yet another sign that deflation is present in the system. Fed. That measure hit its highest point in January, and has since dropped 14%. It's going down faster than 20% per year. Now tell me why this is important. So, a lot of auto paper makes assumptions. Or buyers make assumptions about how much cars are worth after they've been used. Those prices have been going up as well. They have been steady, though maybe not as much as the used car index. The used car price index is going to fall here if we're right. Why? Well, a lot of people got cars during COVID to avoid taking the bus or train. The way things were, they didn't need that car. Still, they were glad that the prices of used cars were going up because they planned to sell again when things got better. At one point the price of a used car was up 54% year over year, as I already said. They are now flat on their backs. Dealers who bought used cars for too much are now sitting on losses. And they will have to get rid of those stocks, because it costs money to keep stocks, especially now that interest rates are going up. They will have to sell because of this. We think that's already taking place. There is also a lot of car paper worth $1 million. Now this won't be a risk to the whole system. However, auto paper did the best from 2008 to 2009, so this will come as a big surprise to many buyers. What is one more weak spot in the US? Businesses do have a lot of debt. Why do they owe so much money? Well, they've been buying back shares for short-term owners, who don't mind that they have to borrow money to do it. They either want them to pay dividends and don't care if it means taking on more debt. Well, this is turning into a big problem for parts of the economy that are going through both seasonal and long-term changes. One of those is the retail business, I think. We are still amazed at how much product is being built up out there. As for us, we're looking at this from the point of view of deflation, which we think is the bigger risk right now. The pipeline is full of signs of deflation, starting with commodities, which we'll talk about in a moment. But at the end of the chain, where the goods reach the customers, stores have a lot of stock. The newest one is Nike, which is pretty sexy. Nike is also a store, but it mostly sells to other stores. It's true that Nike's stock went up 44%. There were already clear signs that the customer was getting weak. It had 68% more stock in North America. And the goods that are in transit, mostly from Asia, which means they're on ships, went up by 85%. To get the shelves clear, you know what's going to happen.